Just before this webinar started, I just logged in, simulating a brand new user experience, because I know we have a combination of people that have been with us for a while, and then also those that are brand new to the platform. So welcome one and all. When you log in, you'll see this friendly concierge. What he's going to do is he's going to show, key little shortcuts to get to the most important tools. IVolLive, of course, is over here. This is where we run scans, create watch lists, look at charts and technical analysis. And then also here, you can access those same tools on the left toolbar. I like to kind of look at things from a standpoint of top to bottom, almost like a totem pole. So I started the dashboard, I worked my way down. Getting started with IVolLive is also very important. It gives you kind of that basic foundation and building blocks to build from. And then there's IVolLive, where you can start really having some fun. Calculators, where we could start doing some P&L calculators and probability calculations. We focused on these a lot over the last 2 weeks. So in our recap email today, I'll make sure to include hyperlinks for that. Sentiment analyzer, which is where we'll spend our time today. P&L calculator, to analyze the potential profit and loss of any given trade. And then the real-time spread scanner, another one of my favorites, as well as data download. We did just release an API product. So for those of you that need access to maybe a lot more data than it's available in data download, shoot us a note at support@ivolatility.com. And we'll get you set up in one of our API options, if that's something you're interested in. So moving right along, with Sentiment Analyzer, what's unique about this tool is, with many things like charts or probability or options calculators, like what we did last week, you need to already have your trading idea in mind before you use a calculator or before you go to the P&L calc, for an example, because you need something to put for your inputs. What's cool about the Sentiment Analyzer is you're able to run scans to find ideas, or you're able to bring a pre-existing idea to the table. And I'm going to show how to do both today. But let's say that you logged in, had your coffee, had your tea, and still had no idea what you wanted to do for any given trading session. The best place to go is here. We have our latest news. This is going to give you a couple different paragraphs on what's going on in the market any given day. And then we have our news and research. So these are really good pieces where it's our editorial team using the tools within IVolLive to find interesting ideas. You could see 2 weeks ago, we really did a deep dive on the VIX. With implied volatility, we're able to create a fear gauge for the fear gauge. You've probably heard the VIX referenced as Wall Street's fear gauge, and measures what the S&P looks like, what volatility looks like for the next, and price action, therefore, for the next 30 days. Well, what we're very well known for is our proprietary implied volatility metrics. And that's what you see here in the green line. And so in this piece, we were showing how to use implied volatility to predict where the VIX was going to go. And traditionally, the VIX spikes in September, October, and that's what we were analyzing here. So really cool pieces and information's always lurking here in news and research. And then we also put out updates, right? So one of our most recent updates has been, we added a specific tool for calculators, which I covered last week. And then we also made column settings much easier to use. And so I'll be demonstrating all of that in next Tuesday's webinar, which, speaking of, you'll always be able to join those by clicking on this link here and registering for what's upcoming. And there is always limited room available. So the sooner you do that, the better. Now, moving right along to Sentiment Analyzer. What's great about Sentiment Analyzer is, again, twofold. One, you could use it to run scans and get interesting ideas. And then two, you can use it on a specific stock. So in this case, it's SPX, the S&P 500, but this could be any stock. So I'm going to give you those two examples. Before we do that, I like to show, I typically, anybody that's been on these webinars before knows I like to use multiple tabs at any given time. I kind of do 2 or 3 things simultaneous, and then don't lose my work on any given tab. The first thing I do any trading session is I create my group, right? Because as I find ideas, I want to add them to a custom group. Fortunately, we've also made that very easy. So what you do is when you're here within IVolLive and you're on your stock monitor tab, all you do is you click on the conveniently named new group. And I like to do by date, 9/23, sentiment bearish, right? So we're going to run a bearish scan to find maybe some bearish ideas. And then I like to look at bullish ideas. I'm agnostic. I'm happy to go bullish or bearish, depending on what is the best trade at any given time. So now we have these two new groups. We have the sentiment analyzer bearish and bullish, and I abbreviated it just so it's easy to follow. And then so we have these groups set up. So now the idea is we need to populate it, right? Because right now this is empty. So the way to populate that from the sentiment analyzer is we come here, and again, we're on stock sentiment analysis. So that would be if we had a specific stock in mind. But to build our group of names, here's kind of how I think about it as a options trader of 10 plus years. So when I'm looking for bearish trades, what I like is bearish trades with low volatility, because that means if I buy a put, it's going to be relatively cheap, right? Because if it was bearish with high volatility, those puts are going to be very expensive. So I like to scan for bearish with low volatility. And then I'll scan, you can scan against whatever you'd like, but, S&P is a great target list. I tend to not like any stocks below $5. There's just not enough upside in going short. So I have a filter here of $5 to 100, but you could make that whatever you want, right? It could be from 1 to 1,000, whatever it is that suits your trading style. But for me, 5 to 100 has worked well in my trading. Market cap, I'm looking at things that are from $1 billion to 100 billion. And so I want there to be enough downside, right? If I'm going short. Stock volume, this is within the S&P 500. So this isn't really that important because anything within the S&P has a lot of volume. But if you were trading maybe Russell 2000 or something a lot more shallow, you could see, we have a tremendous amount of coverage within IVolLive. I've got it on the S&P, but we could also have this set to all USA. And if it was all USA, it'd be important maybe to specify that you only want stocks with enough volume, because you're going to get everything within that stock list, right? Of course, run against these different filters. So we also have NASDAQ, we have European stocks, Canadian stocks, and again, Russell 2000. So depending on which group you pick, these filters become more or less relevant. But if we have the S&P, I feel comfortable, not specifying a volume. Dividend yield, if I'm going to be bearish, I typically, don't like a strong dividend, right? So a company that's good, like a dividend aristocrat, I typically wouldn't want to short or go bearish on. But, I have seen where, stocks that have over a 10% yield, when they chop the yield, the dividend price, or when they chop their dividend yield, their share price plummets, right? So, you could have something like stocks with a 10 to 15% dividend yield. Within the S&P, you're not really going to find that. But if you were trading all USA, for an example, that could be interesting, right? Because when those companies chop their dividends, so too will their stock will follow. And if you're short, you'll make money. Options volume, options open interest. Again, you can enter those too. For something within the S&P, not relevant necessarily, but for smaller groups of stocks, certainly could be. Now, what will happen here is we'll show the top 20 results. You could go from the top 50 to the top 200, but let's show the top 20 results that fit kind of this general criteria. And then what I look for is I look for names that I recognize, that I've traded many times before. And my favorite from this is strongly bearish, right? Because that means the downtrend's intact, and quiet. Rather quiet's not bad, but quiet's even better, because that means this volatility ranking is lower. So what this is showing is this ranks from a negative 100 to a positive 100, and the bullish rank obviously is the opposite, right? And so when we dig on a granular level, I'll demonstrate exactly what these mean and what these buy, sell, holds. But for now, just know that this is sorted, right, in ascending order, from minus 22.22 to 33.33, and these are the top 20 names within the S&P that fit this criteria. And if we look to the left under these signals, you're able to screen for things like price change, support resistance, call put ratio, exponential moving average, RSI, CMF. So you can assign different levels of importance to those, right? 0 would mean you don't care. 2 would mean you highly care. 1 is I've just given everything equal weighting, right? So, as I look at this, VFC, this is one I've traded before. MGM is one I've traded before. STX is one I have a name I've traded before. Marathon Oil I've traded before. Kroger is one that I have traded before as well as, let me do this. And so I'm going to show you guys how to add to the favorite. So there's a 1, 2, 3, 4. Those are 4 interesting trading ideas, right? For me, from a bearish position, because they're either they're strong bearish and either rather quiet or quiet. Either way, it means that the put premiums will be relatively inexpensive to go bearish. So I just want to show you. Hit add to favorites. Those just quickly added to that grouping, which will show in a moment. Here we go. Here we go. So those 4 are now within our 9/12/2023 sentiment bearish. And from here, what's neat is we can analyze, whichever field we want to analyze, right? We have our 52-week high lows. We have our IVX. We have our historical volatility. We have our options volume, call option volume, put option volume. You can sort here in ascending or descending order. One of the things I was mentioning at the top of the call was that we recently organized these column settings. So now we have it under, general, right? So company name and exchange. Let's say you don't really care about the exchange. I could get rid of that, clear up a column there. Stock price, we have our intraday, previous day, 52-week. Maybe I'm not as concerned with the 52-week. Implied volatility, we have IVX 30. That's probably our most popular. This is looking out at volatility for the next 30 days. Historical volatility, 20 days, that's our default. These are apples to apples, right? It's essentially both measure 20 calendar days or 20 trading days, right? Because the market's closed on weekends. So historical volatility is looking in the past, implied volatility is looking in the future. Options, right? Here's the options volume. Here's open interest. This is within the S&P, and so I'm not really that concerned about open interest. So I'll go ahead and clear up a column there. For the fundamentals, there's a lot of things you can add now. You can add industry, market cap, dividend amount, dividend date. So let's go ahead and do dividend amount, dividend date, because that is interesting to me. And then correlations, if you want to see how it's correlated to the overall market, you can add that, based on the past 10 to 180 days, depending on if you're short-term or long-term. And then beta, right? How sensitive is it to underlying moves? So from here, now that this newly organized setting, you could apply and save as default, or you could apply for this one tab. So let's do apply and set as default. So that way we'll have apples to apples with our bullish custom group. So here we go. We have the last price, the change day over day. So now one question that came in was, well, how can I see within a custom group the largest change day over day within the sentiment analyzer? And what you would do is you would run the scan in the sentiment analyzer, have your picks, and then you would just bring them into this custom group. And now I could see, Seagate Technologies is down the most out of this custom group. Marathon Oil is up the most today, right? And now all those different columns are here. We have our dividend amount, dividend dates. So with a couple mouse clicks, I got a really, really neat group here that I can come back to in a moment. For now, let's go back to the sentiment analyzer. Let's go bullish. And when I like to go long, I don't really like buying calls. Calls are always very risky. As we demonstrated last week with our probability calculators, I more so enjoy selling puts, and there's a specific trade setup that I like. So I like it when volatility is high, but the stock is bullish, because that means that premiums are juicy and rich. And I'm typically selling puts. So if I'm selling puts, the higher the volatility, the better, because the more income that I'll make. I like here, the S&P is fine. Anything from $5 to $100. Let's maybe make that $5 to $1,000 because we have some high nominal priced shares now within the S&P. Market cap, 1 to 100 billion. I'm fine with that. Here, dividend though, you know, if I'm selling puts, there's a chance I'll be put. And if I'm put, I want to earn a dividend, right? And again, my warning sign is anything over 10%. So I'd be interested in going long and bullish and owning names that pay anything between like a 1 and 9% dividend yield, let's say. Volume, option, open interest, again, not really relevant because we're in such a big, large group. And then I'd hit save and search. So now I'm doing the opposite of what I just did. Now I'm looking to go bullish on some names. So a couple names that stand out to me. Again, here I'm looking for either bullish or moderately bullish. Those are both fine with me. And then volatile, right? Because volatile will mean that the premiums are nice and rich. A couple that I've traded in the past, CVS, TAP, right? Molson Coors. Those two are interesting to me. I've traded those three before. So now here I would choose bullish. And just because I haven't traded something before doesn't mean I wouldn't dive deeper, right? Like Key is one I've been interested in, Key Bank. And so a lot of times I'll find new trading ideas just by running these scans. It's just for the sake of these examples, I'll go with one that I'm very familiar with, so I can give the granular details. But for now, I've got these 4 names, add to favorites. So if we come here, sentiment bullish, right? And now look, these columns are all the same. So it's apples to apples because I just made those adjustments with our newly organized column settings. So that's how all of this, kind of plays together. And again, here I can, analyze. I can say, okay, well, who's got the biggest change day over day in their implied volatility, and I can see that that's Key Corp, whereas CVS is seeing a drop in its implied volatility. And so now we have our 2 groups: one sentiment bullish, one sentiment bearish. If I pick on CVS, if I just click on CVS and I come here, remember when I'm looking to go bullish, I like selling puts, right? And that's why I ran that particular screen. My favorite trade setup when I'm selling puts, one of my favorites, I should say, is when implied volatility and the underlying stock price are kissing. This is what I call kissing, right? So they're joined here. So what this means is we have implied volatility going higher, but we also have stock going higher. So if I sell a put somewhere in here, chances are it'll expire worthless and I'll keep the whole premium. But even if I'm being put at a good entry level, right? Right around kind of these price levels after a downdraft. And that's why I like running that screen of bullish and volatile, because what it typically means is you have the, let me draw this trend line. You have the stock coming out of this downturn here, right? Which is exactly what we have. We have blue, just in case you've never seen this before. The underlying share price is in blue and implied volatility is in green. So that's what we're looking at here. So we could see this is exactly what I would like to look for. Where there's a downdraft in the stock, it kind of sandpapered sideways and now it's moving higher. At the same time, implied volatility is still elevated. So this is just like my golden moment, typically to sell puts, right? And I like to sell puts that expire within 1 to 2 months, 1 to 3 months. And so this 3-month chart is where I make a lot of hay. This is where I spend a lot of my time, is on the 3 or even the 6 month, which you could see is very similar because that just aligns with my trading style. I will say, by virtue of your subscription, you have 5 years worth of data available to you on these charts, which is fantastic. So you have 5 years worth of CVS's price data, which, as you can see, it's been a rough, I guess, couple of years here for CVS shareholders on the spot price. And then you have 5 years worth of implied volatility data and 5 years worth of historical volatility in orange, right? So that's priceless data, and you have 5 years worth by virtue of your subscription. So I don't want to go too far into the weeds on the charts. We have a whole webinar dedicated to that and to technical analysis. But that's when I ran the scan and I saw CVS here under this criteria, I almost already intuitively knew what the chart would look like. So that's a great example too. Sometimes I'll use charts and then I'll say, oh, the sentiment's going to read as X. Other times I'll start with sentiment and then I know essentially what the chart will say. And that just comes with practice. But moving right along, let's stick with CVS for now and enter it in here. I want to show you guys what a deep drill down looks on a specific stock, right? So right now my working theory is CVS would be a good put to sell, right? But I want to verify that. The chart looked nice, but now let me look on a granular level here on stock sentiment analysis. So if I'm in a rush, I read this line right here. You know, it's moderately bullish and volatile, which I love. Bullish ranking. So again, this ranks from a 100% would be absolutely bullish, which is what, you know, we're cruising towards here, because we're on the positive side of the ledger, whereas the negative numbers would be absolutely bearish, right? So we're coming out of that bearish downturn and we're moving bullish. Volatile ranking, this is very similar. This runs from a scale of 100% to minus 100%. So 100% would be extremely volatile and minus 100% would be absolutely still. So in this case, the closer we get to minus 100%, the least interested I am, right? Because that means when a stock's absolutely still, typically its options prices are very low, which if I'm selling options, I want them very high. And then on the other hand, 100% would be extremely volatile, which we're cruising towards kind of my Goldilocks, right? Bullish and volatile. Buy, sell, hold. So what that corresponds with is down here. A green arrow is a buy, a thumbs up by the green arrow is a second buy. So you have 1, 2, 3, 4. A sell is a red arrow here, and another sell would be a thumbs down, right? So you have 1, 2, 3 sell signals, and then a hold is a question mark, 1, 2, 3. And so what do those mean? Well, the first criteria is going to be the underlying price action, right? So CVS has had a strong day, and again, even to tie all these tools together, I knew CVS was having a strong day because I saw the decrease day over day in implied volatility that we just saw within our group here. If we go back to this, and I just want to show, because I like to show how it all plays together. Let me go back here to our group. All right, so with CVS, when I saw this minus 6.63 on implied volatility day over day, I knew that CVS would be rising higher, even if I didn't have these two columns, right? And price change. So again, after practice, you kind of just start intuitively knowing what all of these signals are going to be. Historical volatility term structure does not tell whether the stock is likely to trend or revert to the mean. Well, that's exactly why we have a question mark, right? Because with historical volatility, there's no clear indicator of where the stock's going to go, so it's a question mark. Calls and put trade volumes can be balanced and did not give a clear overbought, oversold. IVX term structure, so this is looking ahead, does not show any difference between long and short-term expectations. So it's, you know, it's middle of the road, which makes sense because you know, CVS has just carved out this bottoming pattern and has started moving higher. So, you know, the market still doesn't know, is this trend here to stay or is it going to reverse? For me, I love this entry point either way. So that's why selling a put makes so much sense and why these two question marks actually excite me, because that leads to the volatility, which leads to higher put premiums. Then we go to technical indicators. And this is what's so cool, because we're looking at kind of fundamental analysis and technical analysis. And for me, I love combining those two kind of 50-50 as I'm trading. I've found to be all fundamental is to be a bit blind, to be all technical is to be a bit deaf. And so by combining the two, you're neither blind nor deaf when it comes to reading the market. So the first technical indicator we look at is the EMAs, exponential moving averages. If you're new to technical analysis, don't be intimidated by that. Just know that, you know, what this is looking for is the moving average within the underlying stock, right? And so what this is saying is the stock is trading below those EMAs, which is why we have a down arrow. The general recent behavior of the 14-day RSI, again, this is another very popular technical indicator. It stands for Relative Strength Index. It's above 51%. So what this is saying is we come here, right? This is middle of the road, but it's trending higher, right? So if the RSI was below 30, this would be oversold, in which case we'd bet on a rebound in CVS. If the RSI was above 70, it'd be overbought, in which case we'd bet on a retracement, right? A down move in CVS. I'd be going bearish. And so what this does, the second paragraph under technical analysis, it just puts all of that into practical terms, right? So this is saying all clear on the RSI front. And then the chalk and money flow, CMF, excuse me, gives evidence that the distribution phase is still in progress. So what this means is if we come here, you can look to see where the big money flows are. And so far, the money flows are still negative. They haven't reverted. What you'll see is this will gradually go to zero and then turn bullish. And that's okay. But typically when that happens, the volatile ranking will go down. And so put premiums will also go down. And so I don't make as much by selling, right? Which is why, again, I love this, this kind of Goldilocks region where implied volatility in green and underlying stock price in blue where they kiss. So moving right along, just while we're down here, you also get a cool snapshot of the stock. This is the CVS's opening price. This is the high-low close. Here is the change of it's on the move. Here's our market cap, 52-week high-low, dividend yield, frequency, and date. All in my opinion, very important stuff, especially if I'm designing a put trade. Maybe a lot of times what I'll do is I'll have it expire right before next dividend date. That way, if I do get put, I do earn that dividend. That in this case for CVS, that'd be 60 cents a quarter per share. Here we also have a snapshot of correlation. This is why I didn't add it to the column settings, because I knew once we got to sentiment analyzer, it'd be here for me. So, CVS hasn't really moved in lockstep with the market, less than a 50% correlation with the S&P, right at 50, right on the nose of the Dow. I mean, it's not, I would call this not correlated to the overall averages. Here's another cool snapshot. Again, this is why I didn't add these columns under our view here, because when we're in the sentiment analyzer, I get my favorite ones anyway. So this is showing me what historical volatility looks like. You could see we had a spike in 30-day historical volatility, which typically means maybe there's an earnings announcement over the past 30 days. And then looking out ahead, this is how we look. Implied volatility is kind of in lockstep, right? We look 30 days out, we're at 23.5. We look 180 days out, we're at 25.9. Typically, if the market makers see some kind of earnings risk or what have you, you'll see a spike wherever that earnings date will fall in the future. So coming up here to the final part of kind of the in-depth analysis within stock sentiment analysis is we have these price bands calculators, which I love. So, what this will do is reading from left to right, you can ask our system, what's the likelihood a stock will trade within a certain range? It defaults to tomorrow. Like I said, I like to go about 2 months out on my trades. I found when I'm selling options, that's been my sweet spot for earning the most premium and then kind of going into the intense time decay on the second half of the trade, right? From 30 days down. And then you can choose, depending on what type of trader you are. I like to use IVX 30, but if you're more long-term, you could use IVX 180. Or if you want to look, and base your measurements on historical volatility, you can do so as well. I will say our most popular is this IV30, and it's, again, the one I prefer. So I'm going to say, all right, well, what's the likelihood that CVS will be one standard deviation, which would, from its current price. And all that means is I don't want anybody to get kind of lost in the weeds of the fancy terms. All it does is take CVS's current price and it says, okay, if we go higher one standard deviation, that'd be 69. If we go lower if we go lower one standard deviation, would be at $67.32 a share, right? And what's the likelihood that will happen? 2 standard deviations obviously gets wider, right? Because this band is expanding. Imagine it as like a rubber band or an accordion. And then as we get 3 standard deviations, that accordion stretched out even further. And so that would be on the low side, 65, 68 a share. On the high side, 70, 72. Let's just go ahead and hit recalculate since I changed that one input. I went from tomorrow's reading to 2 months out, which is 62 days. And we can see now these everything's updated, right? So within this time frame and within these 1, 2, and 3 standard deviations, using an IVX 30, if implied volatility stays around these levels, this is the probability that CVS will be above 62, but below 75, for an example. This is the probability that it'll be above 56, but below 83. And then you can see 3 standard deviations out, 51.17 and between 51.17 a share and 91.56 a share, there's a 99.7% chance that CVS will fall somewhere within that range within 2 months. But of course, because there is a 99% probability, if we were designing a trade with a $52 strike price, we're going to make almost no premium because the probability is so high that it won't be below, it'll be above 51.17 a share at expiration, right? And likewise here, for 91.56 on the upper range. So typically the sweet spot falls somewhere within this one standard deviation, right? Because you have a bit greater than 50% probability that the stock will end within these 2 numbers, which is great. That's great odds, but that's still not 100%, right? And so the options premiums will be juicy enough to make it worthwhile. So I tend to, when I'm selling options, I tend to stay within this first standard deviation. Now, if I'm buying, maybe I go further out because it's going to cost me money out of pocket, and I could see a likely range. If it only costs me a few cents to, roll the dice, I could be willing to do so, right? So here we go. That is a deep dive on CVS within the stock sentiment analysis. Again, my overall takeaway is that we're in a good position, right? We have implied volatility and underlying stock price coming together. We ran the scan and CVS showed up as moderately bullish and volatile, which means it's kind of uptrending and premiums are still high though. And so from here, what I would do is it's all about how to apply this information to actually make money. So now I'd say, all right, well, let me find an option on CVS that expires within 2 months out, right? My sweet spot. That's how long it's normally, I've observed, it's taken for this kind of trend to play out. When you have moderately bullish and volatile on the sentiment analysis, and then you have this kiss here between implied and underlying stock. So today is the 12th. Let's go out to, let's say October 20th, right? That'd be about 2 months from now. And we can, from here, you'll see within your IVolLive, you can look at all expirations for any name we covered. You could look at leaps if you prefer leaps, or you could look at a specific expiration, or you could look at all. And I just prefer, as a nature of habit, to look at all. You could set if you like to trade out of the money, you could set your mid price as whatever you'd like. For me, I like to have it around the current share price, which is $70.47. But again, if you like to go out of the money, you could have that as 90, you could have that as 50, you could have it as 60, whatever you prefer. Strikes, you could do all, or 5, 2, or 1. I find 1 is a bit too targeted. 2 is a bit too targeted. 5 I like because it gives me the at the money and then the 2 around it. But again, choose whatever suits your trading style. And then you could look at only calls, only puts, or you could look at both. And then of course, calls are on the left, puts are on the right. So as I look at this, I say to myself, I love this. I love anything within this entry level from 70 down, right? So if I'm selling the put, the sentiment analysis is backing me up on that. The chart's backing me up on that. Now what I come here and I start looking at pricing. So I say, all right, well, if I sold an at the money, I can make at $70, right, which is still below the current share price. I can make $1.77 a share, which translates to $177 a contract. Now, as I go further out, further down on the strike prices, you could see the income reduces. And the reason why ties exactly into these price bands calculator, right? Because the higher the probability of something, then the lower payout the market's going to pay, right? There is no such thing as a free lunch. So then to decide which put I'd like to sell, right, I will come in here to our calculators. Again, we spent a lot of time on this last 2 weeks, so I don't really want to go too far into the weeds here. But what this does is it pulls up the specific strike, right, the put for CVS, the expiration. It pulls up the current interest rates, current dividend, some amazing info over here on the left. And then over here, I'm able to say, and then here we go. Here's our standard deviations, right? Going if CVS went down, and then if CVS went up in price, this would be 1, 2, then 3. And then on the same token, if it entered a downtrend, this would be 1, 2, and 3, which again tie back into here, our price bands calculator. So a lot of times you'll find with IVolLive, you could get the information a couple different ways. But again, I like to show how it all kind of is interwoven with each other. So what I want to know if I sell this $70 put is what's the chance I'll be put, right? So what's the chance that CVS, what are the odds will be below 70 at expiration? On the other hand, if I'm going bullish, I don't mind buying a call if the numbers are right? So maybe I should be looking at buying the call option one strike price up, which would cost me on the call side, which is to the left here, C stands for call, that cost me about $1.25, right? So, when I'm going bullish, I like to look at buying a call or selling a put. I hit confirm. The chance that CVS will be below $70 is only 44%. So what this means in trading terms is there's only a 44% chance I'll be put. On the other hand, then there is a 36%, there's only a 36% chance, CVS will be above 72.50. So buying this call for $1.25 likely is not a good trade because I'll lose that $125 I spend. On the other hand, too, I don't want to bet on CVS staying in, kind of staying where it is, right? Somewhere between 70 and 72.50, because there's only a 19% chance that will happen, right? So a spread trade kind of banking on things staying status quo would also not be a good bet. So just by running this simple probability calculator, I can do so many things. I can eliminate buying a call. I can eliminate a spread trade that would benefit and be profitable if status quo stayed in place. And I know that chances are CVS won't be below 70 at expiration in 60 days from now. And even if it is, it's at a price I want to buy anyway, right? So this looks like a really good trade using, the probability calculator to back that up. And so once I know that the odds are on my side, right? May the odds forever be at your side. The final step is to go to the P&L calc, go to CVS. Again, we went into tons of depth on this last week, but basically go to that same option. And here we are, the October 2023 $70 option, and I'm here. So that's populated behind me. And what you see here is very useful because it shows me in table form and in graph form what my potential P&L looks like for the specific option that I've been analyzing, which is down here, right? We're selling to open this October 20th put at 70. We're selling one contract for $180 a share, or $1.80 a share, which is $180 a contract. Here's our implied volatility, here's our delta, gamma, theta. And this is the final piece of the puzzle, right? Because it shows me, all right, I'm profitable. My blue line is my break even. This shows me I'm profitable as long as CVS is on this side of the chart. I'm not profitable if CVS turns lower. This puts it in table format, which I also like. It shows me, my peak profitability, shows me, potential loss if CVS, heads lower. And this is a really, really good tool. What's also cool about this tool is, you're able to, let's say you get a better price from your broker, 190 instead of 180. You can update your numbers. See, now my max profit's 190 instead of 180. You could also say, well, what if we sold 10 contracts instead of just one? All of your P&L updates, which is fantastic, because ultimately all of these tools, what we're gearing them towards is designing a trade that we then enter with our broker to generate profits, right? So then you can also play with things on this. Again, I did that in our last webinar, but basically trades don't exist in vacuums. So you could say, well, what happens if this implied volatility goes from 28.21 And what if it spikes 15 absolute percentage points? So we went from 21 to 36, right? What does that do to the numbers? What does that do to the P&L? Where do I need things to go? Also, what if, there's only, let's see, what if we get closer to this expiration? And what if there's only 22 days left to expiration? What does that do to my P&L, right? So we have volatilities going up, but yet we're closer to expiration. And so this curve will update based on these inputs. So the P&L is a super, super powerful tool. If you missed that webinar, for all of our tools, we have our guides, like our handy guides, here you'll always see towards the top of the tool. There's always a table of contents, super well organized, and Control F, you can find, whatever it is that you need within the guide. So going back to Sentiment Analyzer, since that's where we spent the bulk of our time today, what you could do is you come here, Stock Sentiment Ranker, which is where we started, and then here is our service guide for the Sentiment Analyzer. So same thing, you table of contents, and you could read through and you could see, how the underlying logic and math behind everything that we showed today, right? So the signal importance, these different filters for the specific stocks, looking for bullish or bearish, high or low volatility. We cover all of that in these guides, but obviously the goal of these webinars is to make all of that super easy to follow and digestible, and then most importantly, applicable to your trading. So what I'd encourage everybody to do is to come in, just run some simple scans, bullish with high volatility, bullish with low volatility, and then bearish with high volatility, right? Here, bearish with high volatility. So this would be stocks going into a downtrend that are also very expensive with the options market. So here we go. Walgreens Boots Alliance would, this tells me Walgreens, Hershey's, C's, Citi, these are trading in a downtrend, and they'd be expensive to go short, right? Because the volatility is high, but they could be very interesting spread trades because I could sell one leg to leg into the other, which is where a real-time spread scanner would come in. So that's beyond the scope of today's webinar, but it shows how just by running these simple scans, like I'm able to instantly kind of know what some interesting trading ideas would be and what's going on with the market. Bearish, low volatility, again, kind of my sweet spot. Kroger's one I've been looking at pretty intensely. And then I'd come here and again, do a granular dive and go from there. So I would encourage everybody to play around. Also, you could play around with the signal importance. You could say, hey, I really want to look at price change, but I just don't believe in CMF, the chalk and money flow. So I'll put that at a 0. Run the search and see what names you get. Also play around with different stock lists, and then also, create a custom stock list, because what you can do is you can run these scans against those custom stock lists, right? So, I have a bunch of older ones in here from older webinars, but, you could create that list and then save and search. And if anything hits your criteria, it'll show up. Now, obviously, this had nothing to do with what we're doing today. So it shows that nothing's found, which is also important. Sometimes what you're looking for in your trading criteria, nothing's available in that day. And it's kind of like baseball. Sometimes it's the pitches you don't swing at, right? So you survive for the next pitch. So I also like the Sentiment Analyzer for that, because sometimes I'll have an idea what I want to do and there's nothing to be found, which means I should just sit on the sidelines in that particular case. So that is the Stock Sentiment Analyzer. Just real quick, if for those that are, maybe just joining us, the way this works is we've been within IVolLive today. The account I was using is this Pro Real Time. So all those numbers we're updating in real time. You have access to everything I talked about today. We have an advanced subscription level, which is kind of a middle of the road here between basic and Pro Real Time. So you still do get the Sentiment Analyzer with advanced. You also, of course, get it with Pro Real Time. And you also get it with basic. You just don't get the P&L calculator, which I think is key, because ultimately at the end of the day, everything builds up to a P&L calc, right? Running the potential profit and loss. So, these are kind of my two favorite, and then, but choice is yours. Everything comes with a 7-day free trial. So you're able to just, key in choose the I love options, IVolLive options, and you could just choose which plan you like. Alternatively, you could do IVolLive futures, if you prefer trading futures. And then we also have API. And so this is what I mentioned at the beginning of the call. If you're somebody that needs access to maybe more data and you want to do, this is perfect for back testing strategies. So we have two different API plans. Again, I don't want to go into the weeds, now, but essentially one will give you the pricing data and volumes and open interest. The other will give you that plus the Greeks and implied volatility levels for whatever it is you're looking for. So if that's something, we also offer a 7-day free trial. And if you're interested in that, just shoot us a note and I'll put that link here. So that way we have it for anybody that needs it. This will be in the chat to register for a 7-day free trial. And then support at IVolatility.com. So I'll pause now. We're 10 minutes from the hour. I like to see if there's any questions, comments. We do like feedback on these. We're always looking to make sure we're delivering value and useful information. We're updating our webinar format, so look out for updates on that as well. Make it a bit easier to register. But for now, any questions on what we covered today or anything else? Take a quick sip of water here. Okay. Well, looks like if there are no questions, thank you guys very much. If you think of anything, just shoot us a note, support out IVolatility. And again, any feedback is great too. What you particularly enjoyed about today or whatever, we always appreciate those notes. So thank you for joining us for the Sentiment Analyzer tool. And until next time, happy trading.